Hey guys, how's it going? And thanks for coming. I'm Nick, and this is Real Life Money, where we talk about real life and money, because you know schools aren't. So let's get started. So in this video, guys, I'm going over the 3 stocks that I'm buying for April of 2018, and I decided just to do it now because look at the market, what's going on. Another sell-off was on Monday. The Dow was down 1.3%, kind of rebounded slightly for Tuesday. It's all over the place, so you might be able to find some good deals out there. So real quick, guys, I just started an Instagram account for this YouTube channel, so if you're interested, I'll leave a link in the description if you want to follow it. I'm going to see how that goes. Going to be posting some videos, like pictures throughout the day that I think that could help you guys out, different stocks and stuff like that. So, moving into the first stock, which I think I covered before, but still interested me, is Boeing BA. Boeing has been very, very interesting, definitely for this year so far as well. But you can see their 6-month chart to the right over there. Now, for last year, they returned, I mean, right now, of course, with the market volatility, but their return has been like 80 to 100%. It's just been ridiculous. We're going into some financials in a bit. They do have a dividend of right now just over 2%, so they do have their growth as well as that nice dividend right there. So a couple statistics real quick. We could see their trailing PE is 24.7, so a little bit high, but their forward PE, what they're expected for next year, is just under 20, so it's not as high. But with their growth that they're having, I think it's not too bad at all. So, and again, you could see their 52-week change right now is 84%. Their beta is 1.6. So they are kind of volatile, especially in the recent weeks. You know, with the different tariffs that Trump has been putting on, and they're also arguing if like Air Force One should be with Boeing and stuff like that. So a bunch of political stuff has been going on, so they could be at a good sale right now. Again, moving into the interesting part, again, I mean, you could see 2 charts over there. Their revenue is slightly decreasing. However, and this is a big however, their earnings, or well, first let's look at the net income. Just amazing. They have really, really good cash flow. You can see recently it shot up from 4.8 million to 8.2 million basically. So huge growth in net income, their gross revenue. So their revenue might be declining. However, they are efficient with their expenses. They're getting more deals. When the government wants to put more money into the military, into, you know, aircrafts, that's going to help Boeing out a lot. Now, the different tariffs with like metal and stuff like that might be affecting, well, they probably will affect Boeing, but I don't think it's a huge factor. So they're going to continue creating these amazing aircrafts at a very good cost. And they're part of the Dow. They're a huge company. A little bit more information here. Their revenue segment for commercial airplanes increased 8%. Defense, space, and security increased 5%. Global services increased 17%. So they are increasing at a good amount right now. And this was their earnings at the end of January, by the way. You can see they delivered 209 commercial airplanes in 2017, which is a 13% increase. So you can see they're growing. So that's about it with Boeing. I don't want to go into too much detail just because I talked about it before, but I think for the long term, that's a pretty solid pick, especially in this volatile market. They do have a dividend, so you could kind of sit there, collect those dividends, see what happens, and watch the growth over the long term. Now, the second stock that I'm buying for April, which I actually just learned about like last week from a guy at work. Quick shout out to Jake. But this is actually very, very interesting. It's a solar company. I never heard of it. I don't know if you guys have ever heard of it, but they are called SolarEdge Technologies. Ticker symbol SEDG. You can see their 6-month, and recently they just shot up very, very nicely. Their growth is amazing, guys. And once we go into the financials and the numbers, you'll see that. Unfortunately, I didn't know about this stock last month, but it just rose like nobody's business. Now, first, well, you can see that it is a smaller company. It's actually international as well. We'll see that. But $2.4 billion, that's a small company. Looking at their beta of negative 0.5, so it really doesn't have anything to do with the market. If the market drops, this stock could do something completely different. Now, this is like the first thing that interested me as well. Well, maybe not the first. The huge stock gain in the past month got me interested. So you can see their trailing PE is just under 30, a little high at that point. However, if you look at the forward PE is just over 18. Now that is very attractive, especially with the growth that we could see. If you look over to the 52-week change, huge numbers, which could attract anybody investing money right now. 280%. You would have more than doubled, tripled your money at this point in the last year, guys. So this is a little description of the company, SolarEdge Technologies. You can read through that. But they, have designs, develops inverter systems for solar installations and whatever. You can see the different countries. Their headquarters is actually in Israel, which is interesting. They do deal with the United States. I hear they do deal with Tesla actually as well, so that's very interesting. Tesla also has a solar company of their own, Solar City, which is a thing to hold on to for a second. But United States, Netherlands, Europe, so definitely more international, slightly involved with America. Now, of course, I'm still doing my research with this company because it is very, very interesting with the numbers you'll see in a minute. They're just amazing. But they're not just another solar company. I remember I used to watch Solar City. Tesla bought them. There's a bunch of solar companies out there, and a lot of them actually don't even make money. They're just in debt because they have to do what they have to do. But they, as well as solar panels, their main product is these solar inverters. So it's kind of like a battery. So you're able to store this energy, and their inverter, you're able to hook something up. So if you lose power or whatever, you want to use the power that you gathered, you use that inverter. So just to put that out there as a quick idea, just that they are more of a unique company. Looking at the financials now, which will blow your minds, moving on, their revenues. You could see their revenue from 2015, 2016, 17, they have just been destroying their numbers. Their gross profit is increasing. Moving a little bit further down, which got me even more attracted, their net income is increasing. With these solar companies, a lot of them are losing money. They have a lot of debt. But you can see their net income is actually growing very, very well. And not only do they have amazing revenue, income, and that stuff, their balance sheet is also amazing. You can see they have some nice amount of cash, short-term investments, and stuff like that. But what really attracted me is their liabilities, their short-term and long-term debts. You can see all that debt. Wait a minute, they don't have debt. That's what attracted me so much. So they have all this cash, they have all this revenue, and they don't have much liabilities. You can see even to the chart on to the side, their growth has just been very, very nice. So their balance sheet is just kind of unbelievable. So the company's fundamentals, you could see their growth in revenue, income, their balance sheet is amazing. So you could see that growth, that 280% growth is justified by their numbers. It's just not like, oh, solar energy could be a future thing, so people invest in it. There's a reason why, especially for last month. Now, let's look at their earnings. Their earnings, once again, are quite amazing. Their revenue, $166 million, up just under 30% year over year, and they beat those estimates by around $7.5 million. That growth is incredible. Now, that growth is possible because it is a smaller company, so smaller companies have more growth in the beginning. That's why. So this is a little bit more of a riskier investment, could have more volatility. Looking into more information here, again, if you want to pause it, read through this a little bit, you could see the growth that they're having more, you know, their gross margins up very nicely. And then you could see their price targets for multiple analysts and stuff like that. They've been increasing them. So again, I like what I see. The business is unique. It is more of an international play, so it kind of takes away from America if you want to diversify a little more. So I like that. Their forward PE is in a fair valuation. You know, it's not like hundreds and hundreds of PE. Their balance sheet is amazing, their revenue, so it's definitely very interesting for me. Of course, I'm going to continue doing a little bit more research. I would love if this company dips at all. If it does, I would love to jump in, but I might just get in it now, just slightly, just in case it continues to go up. But if it drops, I'll get in a little more. So I like this one. So I probably took out the most time of talking about SolarEdge just because they're so interesting. So definitely look into it, guys. But moving on to the last and third stock that I'm buying, which is probably the cheapest stock that I've ever seen, is what? Yeah, Berkshire Hathaway. Not the cheapest stock in the market. Don't worry, you're able to buy it. These are just A shares. They do have B shares. There we go. It's a little bit better pricing there if you don't have $300,000 sitting around somewhere. But they're around $200, so it's a little bit better. But you could see their 6-month chart has been all over the place, especially with the correction, and it is a little bit down for right now. This is Warren Buffett's company, so they have a huge holdings. We'll be getting into it. Their PE right now is 11. Again, a little statistics going on. Their PE again, 11, which is low. Their forward PE is just over 20. So you could see that it is a little bit higher moving forward. And their 52-week change did beat the market of over 20%. So whether you like Warren Buffett or not, guys, some people hate him. I'm not sure why. Maybe because he's rich and they're not. I don't know. But his thoughts are very interesting. One of the first guys that I looked into when I first started investing. But you can't deny these numbers. Their revenue has been just going up and up and up. Their net income, which actually surprised me of how much it shot up recently. You could see it went from 24, then it jumped to 45. But I like Berkshire Hathaway because if you're not sure of like which stock to get into or which sector to get into, he's very diversified. He has a bunch of stocks from all over the economy. So here's a little bit more information about Berkshire Hathaway. This was in November, of course, with the earthquakes, hurricanes, and, you know, all that bad stuff. He does own insurance companies. So when stuff hits the fan, insurance companies have to pay up money to, you know, fix all these problems. But majority of the time, they're taking in money when there's no problems. Most of the time, people don't use insurance. So insurance companies make a lot of money that way. And if you're interested of what companies are held by Berkshire Hathaway, here's all of their holdings. Their top holdings, which they have been getting in for like a year or two now, is Apple. Hugest holdings in their portfolio right now of around 14.5%. They have Wells Fargo, so they are in financials, especially in an increasing interest rate environment. Financials could definitely be a good place to be in. Again, Bank of America, no doubt he has Coca-Cola. He will never sell that. Stable company. American Express, credit card company. Everyone's using credit cards, you know, credit card processing, online payments and stuff like that. So that, further down the line, he has a bunch of airlines as well. He has Southwest Airlines, Delta, So she sees growth in that. And a little bit further down, he has Visa. Visa is a company that I love as well. So he has a bunch of different plays. So the fact is, if you kind of just want to get into a bunch of different things, I think this is a pretty good option for you. Maybe not the Class A shares, but the Class B shares could definitely help you out. It's basically like a mutual fund, but no expense ratio. You know, that's pretty cool. So it's good for diversification. Their PE right now is 11, and it's Warren Buffett. And, you know, the people under him, they have great ideologies, definitely long-term growth. So if you pick this up and hold it, you'll be fine. So those are the 3 stocks that I'm looking to buy in April 2018, guys. We got Boeing, SolarEdge Technologies, and Berkshire Hathaway. So if you guys have any questions, comments, concerns, please leave them down below. I love to hear what you guys have to say. And don't forget to subscribe to my channel, Real Life Money, where we talk about real life and money, because I believe we can get a hold of our money and stop following the man. So thanks so much for watching, and I'll see you in the next one.